Getting kicked out of the club is certainly no fun. That's, of course, unless you're a nonconformist like Dennis Rodman. Then you relish it. In the bond market, fallen angels are bonds that have been kicked out of the club because their credit ratings have been dropped from top-notch investment grade status to junk. Today's ETF battle is a head-to-head contest between two such bond ETFs. It's Blackrock versus VanEck. Stick around. Welcome to ETF Battles. I'm Ron DeLegge, and if you're new to this show, welcome aboard. We're in the midst of Season 5, and this is where we huddle to analyze audience-requested matchups of ETFs versus each other from you. And, of course, the purpose is to help you make informed investment decisions. If there's a certain ETF battle contest that you'd like to see, send me your ETF ticker symbols in the comments section below or on our X feed at ETF Guide. Be sure to visit the description section. We've got that posted below. I've got links to our program judges. Get in touch. Also, I've got a link to our program sponsor, Direction. And finally, we've got lots of viewer resources with download links to audio and ebooks and other goodies, so do not miss it. Today's ETF bout was requested by a viewer named Rodrain2, and it's between so-called fallen angel bond ETFs. We've got ANGL from VanEck and FALN from Blackrock. And just for some background, fallen angels are bonds whose credit ratings have dropped from investment grade to junk. And downgrades can cause a lot of unexpected things, including forced selling. Maybe that's not so unexpected, but as they say, one man's junk is another man's jackpot. Will we find a jackpot on today's ETF battle? Well, let's see. Judging today's matchup, we've got a duo extraordinaire. We've got Frank Tedesco with Astoria Portfolio Advisors and David Dierking with TheStreet.com. Judges, welcome back to ETF Battles. Great to see you.
Hey, Ron. Good to see you again.
Thank you, Ron. Great to be here. Thank you for inviting me on.
So we got our four battle categories: cost, exposure, strategy, performance, and yield are combined. And then we got our mystery category. That's the category where our judges can surprise us with any factor or thing that they feel is crucial to today's contest. Our judges can also nominate wildcard ETFs if they feel there's a better choice somewhere else, or they can opt for split decision. I've got the scorekeeping chores, and at the end of the program, we will declare an overall winner. And keep in mind, none of the battle outcomes that we ever do on this program are ever predetermined or known in advance by myself or our judges. To kick things off, let's start with the first category, cost. Frank, please get us started.
Sure, Ron. Thank you. So between these two Fallen Angels ETF, they are both going to run investors 25 basis points. So to make my response short, it's a tie here for me.
Okay, thank you, Frank. David, you're up next. Give us your analysis.
Yeah, I agree. This is about as even a battle as I think I've ever seen in this category. Like Frank said, 25 basis points on the expense ratio. Both of them trade at almost identical spreads. They're both very liquid. They trade tens of millions of dollars of shares every day. So, yeah, this is a split decision right down the middle.
Up next is exposure strategy. And David, you're still up. So break it down for us. How do these two ETFs compare?
Yeah, it's not surprising that these two funds are very similar since they follow pretty much the same strategy. As I was digging into these funds, I found a 77% overlap between the portfolios, which, again, isn't surprising. Nothing else is even close to these two funds, so they're really unicorns within the bond ETF space. And if you dig down further, I mean, there's a lot of similarities. They both have about 75% in U.S. bonds. Their duration's about the same. So you really have to dig into these funds to find differences. And the one thing that I did see on here is the credit spread on Angel is a little higher than it is on Fallen. And generally that means the credit quality profile is a little worse. And that is actually the case with Angel. It's got about 72% of its portfolio in double B rated bonds, and Fallen is a little higher at 78%. So you've got just a slightly better credit profile on Fallen than you do on Angel. And, you know, what your preference is really up to you. If you want the slightly more aggressive, perhaps higher yielding portfolio, you might go with Angel. If you want a little more of a conservative tilt, you'd want to go with FALN. But my choice in this category is FALN. I'm not a very aggressive investor when it comes to the fixed income space. I prefer something just a slight bit safer. And while these two funds are very, very similar, I just give the slight edge to FALN in this category.
Got it. Thank you, David. Frank, you're up next. How do you see it when it comes to exposure strategy?
I could not have said it better myself, David. Great response, great breakdown of the exposure strategy. You really have to dig deep to find the nuanced differences between the two ETFs. If you look under the hood, you find that some of the holdings within FALN bump up against their 3% cap, whereas the 10% cap on the VanEck ANGL ETF, none of the funds really come close. You have the top holding at 3.81%. Both are rebalanced monthly. So the nuanced difference that you highlighted is really where you're going to find the difference between the two.
So which of these two ETFs stands out in your opinion?
I'm going to go with FALN. It looks like the way that the methodology of the index is set up, those securities that breach the 3% cap are worth their 3% in the portfolio, and that has led to some outperformance, as we'll discuss in the next category.
All right, so that takes us next to performance and yield. And Frank, you're up, so break it down for us.
Thanks, Ron. And since we're looking at two bond ETFs, I'll be sure to cover yield first. That's what a lot of investors are looking at when they look at these products. And it's tight in this battle, but there is a winner. So Angel has a 30-day SEC yield of 6.55% versus iShares FALN 6.75%. So you get 25 basis point difference higher yield in the iShares product. In terms of performance, also have to give it to the iShares FALN ETF on a annualized basis. If you're looking at year to date, 1 year, 3 year, 5 year, you see iShares product outperforming on each of those time periods. Angel is a bit older, launched in 2012, so you can't compare the rest of the 10-year. But since inception, Angel's outperforming, but I have to give it to FALN. It's had a great track record, and it's outperformed, and it has a higher yield. So we're going to go with FALN on this one.
Thank you, Frank. You're up next, David. Give us your analysis. How do you see it when it comes to performance and yield?
Yeah, I see it pretty much the same. I mean, Frank ran down all the numbers, so I don't need to repeat any of that. FALN's got the higher yield, which, like you said, is what investors are looking for when they invest in these products. And FALN has generated better historical returns than Angel. So, yeah, FALN is my winner.
Next up is the mystery battle category, and this is where our judges can surprise us with a factor or maybe multiple factors that they feel are crucial and pertinent to today's contest. So, David, what is your mystery battle category, and which of these ETFs wins it?
Well, my mystery category is going to be the very broad category of environment. And when I say that, I just wanted to talk briefly about sort of the high yield bond landscape in general. One of the things that I look a lot at in this space is credit spreads, and I mentioned that earlier in the exposure strategy. But if you look at them historically, high yield bonds are pricing in very little risk. Credit spreads are still at historically low levels. So that's why you've seen a lot of outperformance in this space compared to treasuries and investment grade credit. So I think I'm looking at it from the standpoint of where the overall economic signals are pointing to. We know the Fed is about to cut interest rates, and they usually do that because the economy is slowing down, or they see the economy slowing down. So that being the case, that's the kind of environment that junk bonds do not perform well in. And with credit spreads starting as historically low as they are, I think the overall environment for junk bonds is it has a very poor risk reward profile right now. And for that reason, I think probably both of these funds are losers in this category, because I think for investors that are targeting high yield or they're looking at historical performance, it's been a real good environment for junk bonds over the past several years. I think it's unlikely that that's going to continue. I think it's going to be a much more challenging environment for junk bonds going forward. So in this very broad category, I'm going to call it a split decision, just with the acknowledgement that I think both of these funds are probably going to experience some tough times if the economy continues to slow.
Frank, you're up next. What is your mystery battle category, and which of these two ETFs stands out?
For my mystery battle category, I'm going with the Greeks, looking at this from a quantitative perspective, one versus the other. And I got to say, when we look under the hood, Ron, we see a higher tracking error with FALN, but we also see a higher alpha and a higher information ratio. And I think that these are important things to consider when selecting a fund within your portfolio. Tracking error on ANGL is about 0.1. Tracking error on FALN is about 0.46. So maybe it doesn't follow the index quite as closely, but it seems to be outperforming. So in this category, I'm going to go with FALN.
All right, got you down. And you mentioned information ratio. You want to familiarize our audience with what that is?
Sure. So it's measuring PM's ability to generate excess returns relative to a benchmark and the consistency of that performance. It incorporates tracking error, and like I said, it's got a bit of a higher tracking error, but a high information ratio is something that you might want to consider when analyzing the skill of a PM to consistently outperform its benchmark.
PM for our audience is portfolio manager. Frank
Yes,
has got
sir.
all of the verbiage, the Wall Street verbiage, PMs and PE ratios and all this stuff, but we'll try to make sense of it for you. So good job, Frank. Thank you very much for breaking that down for us. That takes us next to the part of the program where our judges give us their final overall battle winner. So how will this go down? Frank, give it to us.
All right, Ron. So I'm sure our audience has heard by now that these funds are very similar, but you've also heard FALN's name win many of these categories. And between these two ETFs, I'm giving it to iShares Fallen Angels ETF.
All right, we got you down for FALN. Thank you very much, Frank. David, you're up next. What is your ETF battle winner for today's showdown?
Well, I'm also going to choose FALN as the winner for some of the reasons we've already touched on. I kind of like the lower overall credit risk profile, again, acknowledging that both of these funds are pretty similar and will perform pretty similarly. I know you love wildcards, so I'm just going to throw one out there, not necessarily related to, winning this battle, but just more as a for-your consideration pick. And that's the Bond Blocks Double B rated high yield corporate bond ETF, XBB. And I'm just throwing this one out here because if somebody is going to target fallen angel bonds to invest in, I'm assuming that the credit quality issue has at least been a consideration in choosing one of these funds. And I throw XBB out there because obviously it's going to be about the highest rated junk bond fund you can find, since it's got everything in the double B rated category. That comes with some trade-offs, of course. It's about 10% less volatile than these two ETFs. It's got about a 6.1% yield, so you're gonna sacrifice some income there going with this fund, but it's just an option if you want to stay in the junk bond category, but you want to try to minimize your risk as much as possible. I really like XBB. I think that's a good option. But within these two Fallen Angel ETFs specifically, I'm going to go with Fallen as the narrow winner.
Well, our judges have spoken, and according to my battle scorecard today, we've got a split decision between FALN and David's wildcard choice, XBB. Now, our judges agreed for the most part on FALN over ANGL, and I guess the one place where there was a split decision was on cost. Both of those ETFs are just about identical when it comes to cost, but everything else, FALN took it. And then at the very end, we had a surprise wild card, XBB, which was mentioned by David. He liked it as a higher quality junk bond ETF alternative. And our judges raised some great points. pay attention to some of those credit spreads. Are at historically low levels, and that could indicate a poor risk profile for high yield bonds, and maybe rockier times are ahead. So just beware of that. Not making any predictions, but again, something to be aware of. And our judges did a great job of breaking down today's ETF battle. Thank you, Rodrain, for this battle suggestion, and great job again to both of our judges. We'll see you on the next episode. Keep up the good work.
Sounds good. Thanks, Ron.
Thank you, Ron.
Do you have a good matchup in mind that you'd like to see? Send me your ETF ticker symbols in the comment section below or on our X feed at ETF Guide. I'm Ron DeLegge. Thanks for watching ETF Battles. We'll see you on the next episode.